Hi, my name is Olufisayo Bassey from ARM Investment Managers, and I'll be taking you through the macroeconomic and financial market events for November 2022. The Nigerian economy expanded year-on-year by 2.25% in the third quarter of 2022. This represents a 1.29% decline when compared with the GDP growth for Q2 2022. The slower quarter-on-quarter growth was due largely to a steeper contraction in the oil sector to minus 22.67% from minus 11.77% in Q2. Although the non-oil sector expanded in Q3, growth moderated to 4.27% from 4.77% in Q2. Headline inflation rose in October by 21.09% year-on-year. This represents a 32 basis points increase from September, as both food and core inflation rates increased month-on-month. While food inflation rose due to higher prices of bread, cereal, meat, oils, and fat, core inflation rose due to price pressures on gas, fuel, garments, and transportation. The CBN's Monetary Policy Committee, at its last meeting of the year, raised the monetary policy rate by 100 basis points to 16.5%. This was in a bid to curtail the soaring inflation rate and capital outflow from the economy. After 5 consecutive months of decline, the equities market staged an impressive comeback in November as the all-share index recorded a monthly gain of 8.72%. Consequently, the year-to-date performance increased to 11.57% from 2.63% in October. This positive performance was driven by gains on bellwether stocks such as MTN, Airtel Africa, Dangote Cement, and Boa Cement. Sectoral performance was mixed as the Industrial Goods Index recorded the biggest gain of 13.17%, followed by the Banking Index and Insurance Index. Yields in the fixed income market expanded but at a slower pace as tight system liquidity and inflationary pressures continued to impact the market. At the NTB primary market auctions held through the month, stop rates were flat on the 91-day and 182-day Treasury bills, while the average stop rate on the 364-day instrument advanced by 67 basis points month-on-month to 14.42%. In the secondary market for Treasury bills, average yield declined to 10.61% to halt the 8th consecutive monthly surge. At the primary market auction for bonds in November, average stop rates edged higher by 22 basis points to 15.38% relative to October. Similarly, at the secondary market for bonds, average yield advanced by 60 basis points to 14.61%. The strong performance of the all-share index in November raised hope that the local bourse may be positioned for a third consecutive year of positive close. Although month-on-month growth may moderate in December, we do not rule out positive surprises from some large cap stocks such as Dangote Cement, Airtel Africa, and Boa Cement, as portfolios rebalance their allocation to close the year. In the fixed income market, activities are expected to decline as the year draws to a close, with investors favoring short-dated instruments over longer maturing ones. Rates are, however, expected to remain elevated on the back of the high inflation rate, tight system liquidity, and low maturity profile in December. A quick recap of what we have discussed so far. The Nigerian economy expanded year-on-year by 2.25% in the third quarter of 2022, driven by expansion in the non-oil sector, while the oil sector contracted further. Headline inflation rose in October by 21.09% year-on-year. The all-share index recorded a year-to-date gain of 11.57%, driven by a monthly positive performance of 8.72% in November. Fixed income yields advanced further in November, given low liquidity level and high inflation numbers. I hope you found this insightful. Should you have further questions or inquiries, please do not hesitate to contact your relationship managers or our customer care representatives. Remember, we remain invested in your tomorrow.